Hey there, this is David Cox, Senior Portfolio Manager at Financial Lane Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, August the 8th, 2025. I do apologize, I've been away a fair bit here and it's not quite over. It is summer, but again, I hope you're all having a great summer, but let's get into the markets here. So we're gonna start off with the big picture here again. We're gonna sort by week. You'll see silver and gold. I'm gonna talk more about that, and you'll see oil on the bottom. And of course, I'll probably mention that as well. Just a reminder to pause your video player at any time for more information. Again, this is the short-term trend, the intermediate-term trend, and the long-term trend as we defined it. Let's draw some comparisons. So here's the year-to-date prices on the top assets. And again, I've just really got stocks, Bitcoin, gold, and silver on there. Now you can see by the year-to-date price performance, again, stocks and have underperformed. They've underperformed gold, they've underperformed silver, they've underperformed Bitcoin. Look in the bottom here, I've just circled, there's the S&P 500 is up 7.8% on a year-to-date basis. Of course, the US dollar though is down, which means to a Canadian, essentially you have to add those two numbers here. So you can see the US market is actually only up about 3.5%. if we look at it in currency adjusted terms. But the point I'm trying to make, I think will become clearer as we sort of look forward here. So again, remember, pause your video player, look at this data. And gold has silver been outperforming? Absolutely. But let's take a look at the next slide. So here's again the charts, and you can see very clearly over the last 6-7 years of chart here, we've got silver up 31%, gold up 28%, and Bitcoin up 23%. If you look in the little panel here in the middle, what I've done, I've just shown you the last 3 months, okay? So in the last 3 months, stocks have bounced quite strongly, up 12.6%, but you can see gold's actually flat, right? So again, what do we as investors want from our portfolios? Well, again, I would certainly argue we need to be getting paid for the risk we're taking. But again, when we measure our portfolios against some benchmark, whether it's the S&P 500, whether it's gold for that matter, we need to be aware that time frame matters, right? And as I said recently to a prospective client, no performance, no advisor, no investment process, nothing is capable of outperforming every single hour, every day, every week, month, quarter, and so forth, right? And so we need to kind of keep that in perspective. The reason I'm showing you this middle panel is imagine, you're sitting back saying, oh yeah, year to date, great. My whole portfolio is in gold. Great, you've done very well. But in the last 3 months, you could look at that exact same portfolio and say, gee, I'm really underperforming. That's really disappointing. See what I mean? You've got to be able to zoom out and you've got to be able to have a time frame that you're comfortable with. Let's move forward. Stocks versus bonds on the Canadian side, on the left side, on the right side versus the US. These are 5-year uptrends. Stocks have been outperforming since rates bottomed. That's the end of the story. Let's again take another way here of I want to encourage you to think, right? So this is oil in 3 ways. Oil priced in dollars. Oil was free. In fact, they paid you a bucket of cash back in 2020 when it went minus $45. But again, in gold prices, right? If you have gold to spend on your oil, you can see oil's actually been in a downtrend. So again, instead of spending dollars, right, that we all talk about, right, whether it's dollars that are printed by a government or whether it's dollars in our bank accounts, again, it costs more and more dollars to buy, let's say, oil. But in this case, if we spent gold, it would cost less and less. And you can see in Bitcoin, it costs barely anything. And so again, what I was trying to tweet here this morning with this chart is essentially that, again, we have to be aware of purchasing power. Just a few things from the All in Sync pool here. You can see I've got absolute charts on the top and I've got relative charts on the bottom. Let's start on the right side here. This is Dollarama, very, very strong chart. This has been a very strong stock for a long time. Love uptrends, absolutely. I've shown it versus the TSX. You can see that's also in a clear uptrend. Let's go to the left there to Broadcom, which we've talked about many, many times, making a new relative highs at the same time as making new all-time highs. And so that's, again, very positive. On the left side, a stock probably some of you don't know, which is RBC Bearings, RBC in the US. You can see not as consistent from an S&P 500 relative standpoint, but again, this is a stock that does certainly meet the in-sync universe, which means it has outperformed the S&P 500 on a 1, 2, 3, 4, 5, and 10-year time frame. Let's take a couple other things here. So the precious metal stocks, gold stocks have been very strong. And so again, Wheaton Precious, dual listed, WPM on both sides of the border, has been very strong. I plotted it versus gold, right? So again, remember, we've already talked about gold being very strong, while Wheaton Precious has been even stronger, okay? So on the right side, we can see the Canadian gold stocks doing the same thing. So Canadian gold stocks are making relative highs versus gold, as gold stocks have really started to provide some kind of oomph here, if you will. And again, that's very, very positive and certainly adds flavor to an investment portfolio. Value versus growth, making, again, multi-decade lows. That is what it is, and it is nothing more, nothing less. Let's just move on. Again, I think this matters. Now, I showed this a couple of months ago. This is the ARK-K. This is the ARK Innovation ETF, which is full of kind of really growthy stocks. Some would say speculative growth stocks. But again, bottom line is, we've had a period here of breakout on a relative basis when we look at the last several years. So that's a base. We've broken out. We've now come back to pull back in here and really kind of test that breakout. But this looks very positive. And again, I'm not trying to sort of necessarily make a case for RK, but it's more the character of the market, the kinds of stocks that are working well. And I think that again speaks to the the environment that we are currently faced with. So again, understanding group strength. These are 6 of the largest stocks here in the cybersecurity industry. I think we all know cybersecurity. We're all getting scanned all the time, right? We get texts, we get emails, all kinds of stuff. Well, these are the companies that, of course, are installing the solutions. What I want to draw your attention to is, some of these charts, they're actually quite different. Again, I've circled a couple of the bars here that, some of which we've even talked about, right? Some of those biggest bars against. You can see the reversal on Palo Alto here into highs. You can see that biggest bar against on Zscaler we talked about. Again, the bottom line is, not all stocks followed the group, or not all stocks followed their sector. And so it is important to understand how the health of a given group, or in a sector in this case as well, performs. Because again, if all stocks are rising, it's a much more constructive environment, and otherwise you have to be very, very stock specific, right? And again, just pay attention. The charts tell the story. As you can see, the charts do tell the story. Sometimes the charts tell the story, I think, far before the news. You can see here, we've talked before about Fair Isaac on the left. Both of these stocks, by the way, had been InSync Universe stocks that had outperformed the S&P on a 1, 2, 3, 4, 5, 10-year time frame. Fair Isaac, again, seemed to know, or the market seemed to know, rather, that, again, the credit rating change with respect to mortgage lending in the U.S. was due to happen. Eli Lilly has been in the news certainly this week. Whether these obesity drugs, work or don't do enough. The bottom line is that this stock peaked out with the biggest bar against, and it did so more than a year ago, right? And so again, demand and supply matters. Remember, most market participants, I think you should assume, are more informed than you, and it's the collective wisdom of all participants that is factored into price charts, which I think is why we can use that to our advantage. Let's finish off with sector watch here. There's the gold stocks up at the top. We did touch on those. Energy stocks just continue to be really, really weak. Definitely not in an uptrend. Neither is crude oil. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financial Lane Sync in Waterloo, Canada.